Hey everybody, I'm Rob Freeman and welcome back to Securing the Built Environment. This is episode 149, and in this episode we are talking about Section 45Q of the tax code. Section 45Q is a carbon sequestration tax credit which awards a tax credit based on the number of tons of carbon oxides that are released into the atmosphere that are otherwise captured and sent underground or using direct air capture removed from the atmosphere. And carbon oxides include carbon dioxide and carbon monoxide. And the idea here for this video is to ask the question of whether Bitcoin mining should be included in 45Q for its ability to remove waste methane from many sources that exist in the US and globally, including landfills and coal emission sites and the process of manufacturing natural gas. There are a bunch of other sources that I'll talk about, but there was a suggestion, a bill that was introduced by some politicians, which I'll describe, to expand Section 45Q to allow methane to be incorporated into that. And it makes a lot of sense because methane is a powerful greenhouse gas, much more powerful in terms of its global warming potential than carbon dioxide. And so it makes logical sense that decarbonization should be done without prejudice. And so we're going to be talking about different reasons why this might make sense. So let's get into the different slides and let me know what you think in the comments. If you found this video useful, please like it and subscribe to my YouTube channel. So what is Section 45Q? Well, Section 45Q, as I mentioned, is a tax credit that encourages the removal of carbon oxides from the atmosphere. It's meant to focus on carbon dioxide, CO2, and carbon monoxide, CO, emissions that are mostly coming from fossil fuel power plants, but that also come from other industrial sources. And it awards a tax credit based on the amount of carbon oxides that are removed from a source that would otherwise release them into the atmosphere. And the credit is computed per metric ton, and you need to talk to your accountant about how that's calculated because it's very complex, and there's a gradual increase in the value of these credits over time. Each year, I think, in 2027, I think they become more valuable. And the strategies for doing this carbon removal right now are somewhat focused on carbon sequestration, where the carbon is driven into the ground, where it is kept there, or direct air capture, which I've talked about in another video. What direct air capture is, basically it's just taking the carbon right out of the air. But it makes sense that methane should be included in some sort of an incentive like this because methane is 80 times more potent as a greenhouse gas than CO2 over a 20-year period. And so back in 2023, I believe, this concept of a bill was presented by a woman named Carol Miller. She's a representative from West Virginia. And the bill was called the Methane Reduction and Economic Growth Act. And it died in Congress, and then it was reintroduced in a bipartisan way by Representative Mark Warner, Democrat from Virginia, and Shelley Morcapito, Republican from West Virginia, that proposed adding this Section 45Q to incorporate methane. And it would include new incentives for reducing methane emissions from abandoned mines. But methane comes from all different types of sources, including landfills, in the process of generating and producing natural gas. It comes from abandoned coal mines. There's all sorts of livestock. The process of managing livestock. There's many different places where this comes from, including things like rice paddies, actually what I had never heard of before. And anyway, so according to the language in the act, and I'm quoting here, quote, taxpayers seeking the credit would have to inject the methane into a pipeline that complies with specific federal regulations, and instrumental leak monitoring or other preventative measures and mitigative measures must be used, unquote, or injected into a gathering system that feeds a pipeline. Alternatively, the methane can be used to produce heat either for industrial use or to heat a structure, unquote. And so that industrial use language is obviously important because that could be construed or interpreted as for Bitcoin mining, which has an industrial use. So that's why I think it seems to make sense that Bitcoin mining should be contemplated as a way to earn this tax credit if, in fact, the bill is reintroduced, because it's died twice in Congress, to expand Section 45Q and incorporate methane into it. So, how is Bitcoin useful in decarbonization today? Well, it's kind of like a Swiss Army knife of decarbonization. It is used in a variety of ways. The most well-known way is by using renewable energy developers can use Bitcoin mining to basically create an incremental revenue stream, an incremental profit, incremental revenue for their operations when they would otherwise be curtailing. And curtailment is a maybe a feature, maybe a bug. It's not clear because I've read articles that say encouraged curtailment, and then I've read articles that say that curtailment is a liability for a developer's income statement. But in any way, I know companies personally that are doing this. They are using Bitcoin mining to make the cost of renewable energy development, the return on investment, come back quicker. And it seems to be working, and it's something that not a lot of people are talking about. Bitcoin also is, obviously, as we'll get into, could be useful for running in far-flung, unconnected areas to capture waste, fugitive methane, and run Bitcoin mining operations to create a profit center where there otherwise would be just released either flared methane or vented methane into the atmosphere. And then, just as a fact point, Bitcoin is 100% electric. So it's a little bit like an electric vehicle in the sense that, there are no emissions from Bitcoin itself. It's all the emissions that come from where the energy comes from. And so if we're talking about methane being used to run the Bitcoin, fugitive methane being used to run the Bitcoin network, well then that's methane that would otherwise be released into the atmosphere. And so it seems to make sense that we should talk about, decarbonization without prejudice as to how it's being done. And then, from other types of environmental, social, and governance factors, Bitcoin's open source, it's decentralized, it's permissionless, anyone can participate, anyone can run a node, anyone can mine, and it's a global thing, so it's not limited to any one jurisdiction or country or government, and it's governed by codes. You can read the code, it's open source, you can see what it says and see how it runs, and it can't discriminate on anybody. So that is something that I think is very good. So getting back to methane, if you look at the University of Cambridge Bitcoin Electricity Consumption Index, I mangled that. Bitcoin, according to Cambridge, is generating about 0.19% of global CO2 emissions. So it's a very small relative percentage. But if you look at on the website, they have a list of relative sizes of CO2 emissions, greenhouse gas emissions, or what they call CO2 equivalent in megatons. Landfills, and these arrows are pointing to the main culprits here, landfills and gas flaring, where Bitcoin could be useful in helping to reduce this waste methane going into the atmosphere. And so Bitcoin miners can convert this fugitive methane into electricity on site. And according to companies that are doing this, it can be done with up to 99% efficiency, which is an improvement over flaring and obviously over venting. And then Bitcoin carbon credits, as carbon credits are going through an evolution of, um, there was a lot of pushback on carbon credits, a while ago because there was, frankly, a lot of, I think, fraud that was going on in the carbon credit market. But Bitcoin carbon credits should be very highly measurable and auditable because it's, again, open source. You can measure the hash rate that the fugitive methane generates. And so Bitcoin carbon credits run off methane should be 25 times more valuable than CO2 based carbon credits because of the fact, in theory, to the fact that they are producing much more global warming potential by being removed from the atmosphere than the Bitcoin carbon credits. So the measurement and verification of those carbon credits and the, to the extent that they want to be tradable and that there's, maybe tax equity appetite out there for doing these types of deals and funding these types of projects, it could be, a big market for it. And, there's a lot of companies actually already doing this, and this is why there is a market for it. This is this is coming from an article I wrote a few years ago, I think in 2022. I did a video on it, on how Bitcoin is helping to reduce methane emissions. But these are some of the companies. The companies there's probably a ton more now. I really got to update this list. But Crusoe Energy, Giga Energy, Engon Solutions, Nodal Power, Northern Immersion, Upstream Data, Vespine Energy. There's a ton of these companies out there that are using waste methane to do different things. So some of them are being used for AI. Some of them are being used for, for Bitcoin mining. But the more power and energy we have at our disposal, the better off we are. And so it seems to me that it makes sense that Bitcoin should be included or part of the incentive to, mining Bitcoin should be one of the things that is incentivized by various tax structures to the extent that there are tax incentives out there for reducing greenhouse gas emissions. So that's it in a nutshell. If you found this interesting, I hope you like the video and subscribe to my YouTube channel. And thanks again for watching, and have a great day.